Budgeting. As you make the transition from college to life on your own, one of the most important financial steps you'll take is the establishment of a spending plan or budget. My encouragement is to do so intentionally so you're sure you're using your money the way you want to. A time-tested piece of financial advice is to live within your means or to spend less than you earn. In my opinion, this is the foundation of good financial stewardship and is the key to reducing financial stress. By spending less than you earn, you provide a cushion to absorb unexpected expenses and create the margin to take advantage of opportunities that come along. As your income grows and as you earn more, I'd encourage you to limit your spending increases so that they grow more slowly than your net income, which allows you to increase your savings. Additionally, as you're developing your budget, if you have charitable intent, be sure to include charitable gifts that you want to make while establishing your budget. Now, if you haven't worked before, or if it's been a while since you really looked at a paycheck, be prepared for the tax hit. If you're earning $50,000 a year, you won't actually get all $50,000. So build your budget on your net or after-tax income. So what deductions should you expect to see? You're going to see deductions for federal income tax, state income tax, Medicare, and Social Security. Those withholdings are taken out of all paychecks. In addition, depending on choices you make, you may also have something withheld from your paycheck for contributions to your employer's retirement plan, or potentially you may have health insurance premiums that are deducted from your paycheck as well. So when you develop your budget, build it around your net income, the amount you actually get each pay period. Now, your budget or your spending plan, this is very important, needs to be a reflection of your priorities and values. You may prefer not going out to eat very often, but spending more money on travel, whereas one of your friends might be the exact opposite. They might want to go out to eat all the time and might not care so much about travel. Neither one is right or wrong. If it is consistent with your priorities, that's a good budget. So be sure as you're building your budget, you include the fun stuff that you most value. Now, having said that, the majority of your spending is likely to fall into three major categories. It does for most people. Those categories are housing, transportation, and food. If you can control those three categories, you're going to free up more for other items. Now, as I said, your budget needs to be a reflection of your priorities and values. So if it's really important to you to live in a nicer apartment, well, that might mean your trade-off is you don't spend as much on a car or you don't go out to eat as often. If on the flip side, you're able to reduce your housing costs, and I'll give you a couple tips for how you might do that, but having a newer car is more important to you, well, then maybe you can fund it via that trade-off. So within housing, one of the tips that I'd offer is if you look at a one-bedroom apartment, the rent that you would need to pay for that will likely be higher on a per-person basis than if you rented a 2 or a 3-bedroom apartment and had a roommate or two that you split the cost with. So maybe consider getting a larger unit with some roommates instead of doing a 1-bedroom by yourself. The other nice benefit is you not only get to split the rent, but you also get to share the utility costs, internet, and even furnishing the apartment, which can be a real help the first couple of years out of college as you're acquiring all of the things that you need in an apartment. Another option, if it works for your particular situation, if your parents are agreeable to it, you could live at home for a while, maybe offer to pay a little bit of rent to do that, but that can help bridge the gap from college to having a place of your own as well. Now, from a transportation perspective, I do have one tip that I want to share. If you're a recent college graduate, you've got a good job, and you go into an auto dealership, you can probably qualify for a car loan that would allow you to buy a pretty nice car. Now, that having been said, just because you can doesn't mean you should. And by that, I simply mean just because you can qualify for a loan doesn't mean you should get it. We're going to talk more about debt in another section of this video series, but be very careful about going out and buying as much car as they would let you. They're not necessarily looking out for your best interest. I would recommend maybe considering buying a used car, or certainly being very thoughtful about how much you spend on a new car. The other thing that I would recommend, be sure as it relates to transportation that you plan for maintenance and repairs. If you don't, those are the kinds of things that can derail a budget and cause stress. Of course, if you're going to move to a major metropolitan city area, you may not even need a car of your own. You may be able to rely on public transportation. New York, Chicago, cities like that that have well-established public transit. Not only that, the cost to park a car in those kinds of cities can be very expensive as well. So be sure you factor that in if you're going to own a car in one of those locales. The third major component for most people is food. That is comprised of groceries and eating out. And as it's probably obvious to you, going out to eat is going to be more expensive for the most part than buying groceries and preparing meals at home. So again, you need to determine what your priorities are in those areas and how much you want to allocate to those sections. So a few additional thoughts for you to keep in mind as it relates to budgeting. Try to keep your fixed costs low, specifically as it relates to housing and your transportation. If you're going to have a car loan and you're going to have rent payments to make, those are very hard to change month to month. So if you're going to set that fixed cost, my encouragement, particularly in your first year or two out of college, try to keep those costs lower to give you more flexibility. It's a lot easier to move up to a nicer apartment or to get a nicer car somewhere down the road than it is to have overextended and to realize you got to take a couple steps back the other direction. So keep your fixed costs low. Additionally, when you're planning your budget, take debt payments into consideration. We'll talk more about debt in a subsequent section, but I'd encourage you, don't just budget for the minimum payment, but have something in your budget that allows you to make more progress at reducing those debts. And then the final thought around budgeting, be sure that you have appropriate health insurance. If you were to be uninsured and to have a major health event, even if you're in otherwise good health, something can happen that could really derail all the good plans that you've put in place. So be sure that you have an appropriate level of health insurance. You might be able to get something through your employer. In fact, your employer may even pay for part or all of it, depending upon the situation. It's increasingly rare that the employer pays for all of it, but you might get lucky depending what industry you're in. And if you don't have access, you might investigate whether you could potentially stay on your parents' healthcare plan. That is now an option for recent college graduates as well. One of the important things to do once you've established a budget is to actually track your spending and then make adjustments to your budget as needed. There are a number of different ways to actually track your spending. You can just track it in a spreadsheet or even on a piece of paper if you want to, or you can use budgeting software like Quicken or a budgeting app like Mint. Any one of those methods gives you an ability to track your spending. And then you need to look at it and say, okay, where did my dollars actually go month by month versus where did I plan for them to go? And if you need to come back and make an adjustment to your budget, that's fine. At the end of the day, your budget should reflect the places where you derive the most value from spending your money. Now, there's another method that some people use. It's called the envelope system. And it is a way of actually using cash for all of your spending. And it's really helpful if you're more of an impulse buyer or need some additional discipline in your budgeting process. The way it works is very simply, each pay period or once a month, you literally put cash in envelopes for each of your major budgeting categories. So you'd have an envelope for groceries, you'd have an envelope for eating out, you'd have an envelope for Coffee, put $50 in an envelope for getting coffee. And when you go out and get a latte, you take $5 out of the envelope. You got 45 left. When the $50 is gone, you're done buying coffee for the month. And it's a really good way to have a much higher level of discipline in your spending, because you can see the cash going down throughout the month, and you can say, hey, look, I don't want to be out of my coffee budget 2 weeks into the month. And it'll allow you to pace your purchases with a little bit more precision, perhaps. So that's a good tool if that's appropriate for your situation. The other thing I'd mention, though, there's a lot of research that's been done, and you should just be aware, if you're using a debit card or even a credit card to make purchases, it doesn't feel as real. Psychologically, consumers spend more money if they can swipe a card than if they have to use actual cash. And so just keep that in mind. If you choose to use a debit card, just keep track of it as it comes out of your account. If you choose to use a credit card, I beg you, please be sure you're paying off your credit card every month. If you're lacking the budgetary discipline to do that, cut up the card, stop using it. You don't need it. It's much healthier to be able to live within your budget and not to get overextended through the use of credit cards. The interest rates they charge on that credit card debt is onerous, and you can dig yourself a hole more quickly through credit card debt than just about any way I know. So please be very, very cautious with that. Now, I mentioned before that your budget should be a reflection of your values and your priorities, which makes it very hard for me to tell you that you should be spending a set amount on each category. But there are some rough guidelines. I've been asked the question often enough. I want to go ahead and give you these guidelines. There are some folks that suggest that you should allocate 50% of your net income to your needs. What are needs? Needs are rent. You got to have a place to live. Groceries. You got to have food. Utilities. You want to keep the lights on and the water running. And minimum debt payments. Then you would allocate 30% to wants. These are things that you'd like to do, but you don't have to do. Eating out, travel, things of that nature. That would leave 20% that would be allocated for savings and additional debt repayment. So remember, under needs, I mentioned the minimum debt payment. I strongly encourage you to make more than the minimum debt payment so you can get out of debt. And so those additional debt repayments come out of the other 20%. Now, clearly, you can see that if you're debt-free, then you don't have to use any of that 20% for savings and additional debt for debt repayment, which gives you the ability to save more, which gives you future spending and financial security. The last thing I want to mention as it relates to budgeting, be sure that you have a cash reserve. One of the top priorities you should have in the first months and years coming out of college is to allocate some additional cash just to have a safety net. It's commonly recommended that you have a cash reserve that is equal to 3 to 6 months worth of spending. I would encourage you to get to 3 months as quickly as you can, and then continue growing that until you get to 6 months. You're not going to earn much money on this cash, particularly in the current interest rate environment. However, having that cushion to absorb an unexpected expense can be very, very helpful. I refer to those as the unexpected expected. We don't know what is going to happen, but we should all have an expectation that something's going to happen that requires us to spend money we weren't expecting. It could be a repair to your car. It could be you get invited to a friend's wedding and you need to make a trip for that. But there are going to be these unexpected expenses that pop up. We don't know what they are, but I can tell you with perfect certainty they happen. So be prepared for them. That's probably enough on budgeting. I look forward to the next session, which will focus on debt.